Too many investors early in their career kind of don't see the forest through the trees and make mistakes, and you can't unmake them. That's one. But number two, they don't document and share their track record of the right way. So I'm pretty active on Instagram and Facebook. You can find me at Tim Herriage on any of them. I've been active on LinkedIn, and this is over a decade, right? And I don't ask for much. Most of the time I'm sharing knowledge, I'm sharing things that I saw online. And I think that's part of the social media kind of plan is be relatable, attract people that like you, the real you.
You're listening to the Accredited Investors Only podcast presented by Accredited Life.
All right, Tim, welcome to the show. How you feeling today?
Good, bud. How are you?
I'm doing very well. I'm happy to be talking to you and happy you're taking the time to talk to me. So as I was saying before we hit record, I always like to start the show with having the guest introduce themselves. So, Tim, who are you? What are you doing? Why are you here? All that kind of stuff.
You know, as you see, if you're looking at the video over my shoulder, the American flags and the U.S. Marine Corps stuff.
Yeah.
I'm a Marine Corps veteran, went to boot camp a little over 28 years ago, got out and started working in construction, and then became a project manager for a house flipper, then started flipping houses, then started wholesaling houses. At one point, I was number one in the nation for the We Buy Ugly Houses company, Homevestors. And then another point, we almost went bankrupt during the Great Recession. And then after that, I ended up going back to Homevestors and ended up being the largest office owner in the nation with, nearly 40 offices across the nation reporting in through me. And then started a trade show. I don't know why, but I did. Sold that to a company called Think Realty, partnered with Blackstone, and we formed B2R Finance. And from there, we did a couple billion in loans for investors in a couple years. I was managing director, left that, took that public, and then I kind of retired, if you will, from like 2016 to 21. And then we took B2R, merged with Finance of America, took that public in 2021. Then I got back involved in the national game, was the executive director for RCN Capital, one of the premier wholesale real estate investor capital companies in the nation. Did a couple billion with them. I'm still part of the leadership team there and a consultant, senior corporate advisor. But then I started Ternus 2 years ago with the idea of creating taking Main Street back from Wall Street. I helped give Main Street to Wall Street back in 2013 when we started B2R Finance. And I tell everybody on my swan songs to kind of take it back and create lending products that the customer needs in a customer-centric model where we just move really fast. Our core values are speed, transparency, accountability, respect, and service. I'm a Marine, so everything has to be an acronym, Peter. So it's STARS. But we move lightning fast and we don't BS the customer. So that's what we're doing at Ternus, and it's been really fun.
Wow. Well, as somebody that deals with lenders on that side of the business, speed is such an important aspect, and transparency and all that kind of stuff. It's just such that'll make or break you. You know what I mean? And it'll make or break deals and things like that too. So, very appreciated. And, I love what you're doing. God, there's so many. I didn't realize your background was as deep as it is. What would you say? What do you love about what you're doing? Like, I'm curious to, sounds like you started a lot of companies, grown a lot of companies. What keeps you motivated? And you sound very passionate and you still have a lot of energy in you. When I do a lot of these interviews, not everybody does. You know what I mean? Sometimes I just think this guy's lost it. You don't seem like you have.
Look, I think I talk to entrepreneurs all the time. There's seasons in your life and in your growth and in your business. And, look, there were times that I had to take time off, that I had lost my passion. But I reread Simon Sinek's book, Start With Why, actually 2 years ago on March 5th. and I was driving to spring break with my kids, and I turned on the audiobook, 12-hour drive, finished the whole book in a day. And it just reignited a passion in me that lending had become misaligned in the investor space with what the customer really wants. And I just saw this opportunity with rates going up and fracturing in the market. I saw an opportunity to not only disrupt, but decentralize, right? Decentralized financing, such a big thing. And yeah, man, I mean, I actually spoke on a stage a couple weeks ago, and I said, I haven't had this much passion in my daily life in a long time, business wise. I'm working 7 days a week right now. I love it. I have to text my team hey, you're going to get a lot of emails from me today. It's a Saturday, but it's raining and cold here, so I can't go outside. So just ignore my emails. You don't need to reply. But yeah, I'm a deal guy. So I love creating companies, and some have failed. I'm not perfect. No entrepreneur is. Stupidest business I ever started was a real estate brokerage because I don't really like realtors, even though I'm married to one. So I don't know why I started that business, but I did. But yeah, I'm a deal guy. So helping investors, our fifth core value is service. And when I'm talking to the team, I always say we make millionaires, right? I mean, this business has really. I was just a dumb kid from East Texas that joined the Marine Corps because I just didn't have a lot of other options. And this business has put my family on a trajectory that if you told me this 28 years ago, I would have laughed in your face. I'd have been like, you are a moron, right? I'm in board meetings on Park Avenue. I hate New York, right? But no, I love it now. If you told me I was flying around on, Cessna citations and literally a group text today is about the plane that we're going to take to Phoenix in 2 weeks with 5 of us. I'd have told you were nuts. I mean, I would. So I'm very passionate about this business. And I do believe that we help, as a lender, we help people maybe without the track record or money get their start and build a portfolio and build wealth and legacy. And I'm very passionate about sharing that.
Well, there's so many things I want to talk to you about, especially about the business and some of the opportunities that you have going on. But just quickly paint a picture of what it is that you do. I mean, from a technical standpoint, what do people come into you for? It's single family fix and flip financing, right in there. So what's the typical time frames look like? Rates right now, all that kind of stuff. Just paint that picture.
Yeah, I'll paint it, man, because there's good, fast, and cheap, and you only get two. And I am good and I am fast and I'm not cheap. It's not hard money. I mean, I'm not really trying to make a fortune off of every loan. And I don't want to take the property back. As a matter of fact, we've been actually originating loans for 13 months now, and we haven't foreclosed on a single property. But we kind of, one of our mantras is we loan the way you buy. The hedge funds buy tens of thousands of houses without walking the houses. I've bought almost 2,000 houses in my career. And if I can make a purchasing decision based off of pictures and comparables, why can't I make a loan decision I don't need an appraisal. I don't need your credit report. I can look at your bank statement and make sure you can actually finish the project, right? I need to have the project inspected and the renovation really looked at to make sure you're not setting yourself and me ultimately up for failure. But when we got loans with first-time customers that have closed in 2 business days, I would say on average, we're 5 to 7 business days. Typically, title is the holdup. Title companies, investors, we're cheap. I tell my team all the time, we're the brokest millionaires you ever meet in your life, right? And the first thing we do is, we want an investor-friendly title company, which typically means low fees and low cost, right? Well, with low fees and low cost means less support and less staff, which means everything typically takes longer. So it's just, the title companies we do business with, we don't get to pick them. So oftentimes title is the last thing ready before we can fund the deal.
Wow.
We're doing 30-year rental loans nationwide as well. So,
okay. I was going to ask you that if this was all, bridge for upfront money for acquisition and construction, that kind of thing, but you're also doing the takeout, on the rental side if somebody wants to hold an asset.
Yeah, but I've always been about challenging the status quo. And if someone tells me no, I get pretty crazy about finding the yes, right? Whether I'm selling to someone or buying a house or negotiating something. So DSCR loans, the 30-year long-term rental loans investors use in the industry, tend to take 24 to 28 days to close. We close them in 14 because we're obsessed about speed and transparency. And so, Peter, I may not take your file because I'm like, dude, look, I mean, there's just very little chance this works out. I mean, your ARV looks silly and your condition's horrible and you haven't even rented it yet. Like, so we pick our customers, but the ones that love us, I mean, my buddy Phil up in New York did one recently, a DSCR loan with us, and he shouts us out on Facebook. He's like, oh my gosh, world record, closed a DSCR loan in less than 2 weeks.
That's unbelievable.
And we do it because we are obsessed with speed and transparency.
Wow. What was it like working with a company like Blackstone? I mean, I got to imagine they push you in ways that you maybe have never been pushed before, or what's it like?
Well, I'll tell you, but the most funny thing, it was about 11 years ago next month. I go to my first board meeting and I'm all prepared and where we go in, and I was in charge of all sales, marketing, and business development. And we go in and I don't have a marketing budget yet because we haven't even started marketing. And one of the guys at the table, I can't remember who, he leans back. He's like, so Tim, what do you think it's going to take for marketing? And I was like, I don't know. I mean, probably, at least $1 million. And I'm it for the year, Peter. Yeah. And he goes, cool, that'll work for this quarter. Come back next quarter and tell us what you're going to spend after that.
Oh my God.
So I call my VP of marketing, who had only been at work. I'm like, I just hired him a week ago, right? I called him and I'm like, hey, I just created a Google AdWords account. He goes, why? I said, because I did the math and I've got to spend $15,000 a day. Because the president of the company times like, Tim, if we don't spend it, we'll lose it. Like, they'll think they would rather you spend it and learn than not spend it and not learn. So I think the biggest lesson was you've got to learn how to raise money, spend money, and ask for money, because oftentimes entrepreneurs, our vision seems really large to us, but in most of the financial world, it's like not even small potatoes.
Yeah, it's a blip on the radar, right?
It's like potato seeds, right? It's not even small potatoes. So yeah, I mean, it was crazy. I mean, just the speed that we made decisions and tested things. And one of the most profound statements. So you got to remember. So I'm a enlisted Marine. I'm from kind of a small town in Texas. And I'm standing on the corner of Park Avenue with this gentleman that was a senior managing director. So he had a $1 billion spending authority with Blackstone. We're talking. We just had a drink. And I'm on my way to Madison Square Garden in a private sedan to have ice rink side suite tickets with a law firm. And he's like, Tim, look. At Blackstone, we hire the smartest people in the world, and we know you cannot be right 100% of the time. As a matter of fact, we expect you to be wrong 30% of the time. He said, what will make you successful in this environment is identifying your mistakes, owning your mistakes, and stopping them. And I think there's so much lesson in that for people, right? Because if you read the book Good to Great, it talks about confronting the brutal facts. Right. So if you make 10 decisions and 3 are absolute crud, learn to stop those 3. Let your ego go. Right. Just cool. We made those 3 mistakes, but look at these 7 things we did great. Where we get in trouble as entrepreneurs or as small business owners is we don't want to admit failure, or we'll double down on what's losing us money and end up neglecting on the easy money we have on the table.
Wow. That makes a lot of sense. Well, now I'm curious. So, what? That's such a different environment, right? To be like, here's $1 million a quarter for marketing versus probably maybe where you're at now in a startup where you're not being backed by a massive institution with just never-ending cash. What are some of the differences there? How do you have to operate differently? How do you think differently? All that kind of stuff.
The lessons of big to small are abundant. And what I've learned after 23 years of trial and error, I believe this time, is how to bring those lessons into a smaller environment. So we're not backed by Blackstone by choice. It's me and two of my buddies that all put a couple $1,000,000 in to get this thing started. And we've done 40, 50 million in business in a year. Well, now we have a real business plan, a model, just like the Blackstone model. We're just probably missing a comma, right? I mean, at this stage. But what I learned is the most important thing people have to understand is you either need to have the capital or need to raise the capital, because when you shortcut your vision and your plan because of capital constraints, typically you don't grow. And when you don't grow, you die. Yeah. So, like, we're doing some fun things. Like, we're doing a crowdfunding offering. And it's kind of funny, Peter. I mean, I've been told for 15 years by people that I meet on the crowd circuit, they're like, dude, you should do crowdfunding. You'd do great at it. And I always stay away from it. I thought it was too complicated. I've heard horror stories about how you have to deal with all those shareholders and all that. And I was like, man, there's got to be a way. So I spent about 2 weeks in December learning it and attending webinars and getting on YouTube and chat GPT in it and just all of that just to figure it out. And, here we are. It's March 12th, and any day now we'll be launching a crowdfunding offering where we're selling shares in Ternus, the parent company, to fund growth and loan fundings. And by doing that, it's fun because we get to offer it to our friends and customers, right? It's not an institutional quality investment, but you get to own part of an early stage company and that you're passionate about. And in my perfect world, it's only customers ever that are my shareholders, right? I don't want to raise money from big institutions. I want to raise money from our customers so that we stay aligned with our customers, so that we give them the products and services they need to grow.
Wow. Wow, that's unbelievable. I love that.
I need to invest, right?
Exactly. That kind of leads into my next question. I mean, so how are you finding investors? I mean, I love to hear your plan. Because you seem like you're the kind of guy that doesn't go into battle without a plan. So how do you plan to find those investors, close those investors, and raise the amount of capital you need? Because I think you hit the nail on the head. You got to be well capitalized. It's such an important part of this business. And I think sometimes investors get a little confused. They don't realize the need for capital. How important that is. So I'm curious to what your plan is with this eminent, and I'm sure you're already making moves now, letting people know. And obviously you're talking to me. But I'm curious to hear what your plan is and what you got in store for raising the money and all that kind of stuff and the marketing and everything else.
I have a pretty organic following on Instagram. I have a podcast. I have a pretty good Facebook presence. Nearly 30,000 people in my email database that I've been building slowly over 20 something years. And I think part of my plan goes back to my core belief of there's only one thing in this business you can't buy, and that's a track record, right? You and I could partner and share track records and combine them on a piece of paper, right? Yeah. But the minute that partnership's over, those track records separate.
Yeah.
Right? And it's also the one thing you can't undo. And too many investors early in their career kind of don't see the forest through the trees and make mistakes, and you can't unmake them. That's one. But number two, they don't document and share their track record of the right way. So I'm pretty active on Instagram and Facebook. You can find me at Tim Herriage on any of them. I've been active on LinkedIn, and this is over a decade, right? And I don't ask for much. Most of the time, I'm sharing knowledge, I'm sharing things that I saw online. And I think that's part of the social media kind of plan is be relatable, attract people that like you, the real you. And then when it is time to make an ask, they're much more likely to listen. Like for instance, every December I post that I'm working with 5 people one-on-one, and it's kind of funny. I use the money to buy Christmas presents every year. I do this every year. It's $15,000, and there's 5 slots, and we're gonna have a weekly 30-minute call that you schedule with my assistant. If you don't show up, I ain't calling you. I ain't taking your call. And it's always funny. Like, I mean, in a day, all 5 spots are gone, and it's not a fake thing. And my wife one day, she goes, well, why are you doing this? I said, I learned so much by sitting down and talking with my followers on a weekly basis. Sure. It's market research. I get to hear their problems, and I'm like, oh my God, why don't you do this? And they're like, oh, that product's not available. I'm like, pretty soon, right? Like, so yeah. I have less than 6,000 followers on Instagram, and my engagement, I don't even gauge it. I don't pay for sponsor or for followers or whatever. But I mean, I'll put it like this. We did what's called a testing the waters campaign on the crowdfunding. We sent 1 email, and I made 1 social media post, and we've already got 4 million in reservations on a 5 million race.
Wow. Yeah, that's powerful.
And it's not even available yet. It's just a reservation.
Sure.
We're launching an accredited investors cash flow fund next month that, I mean, I think we're going to go up to 20 million. I'm not sure. I bet you we raised 5 million in the first month. I mean, we haven't even done an indication on that. I've talked to a couple buddies, and they're like, dude, let me know when you got it open. Because the part of it is I know what the customer wants, right? Like, so many people sell real estate in this market, and they don't know what to do with the cash, or they're sitting on cash waiting on a good deal or something. So most funds are 12 to 18 month lockups. Mine's going to be 6. Most funds have a 60 to 90 day notice period to withdraw. Mine's going to be 30. And people I talk to are like, well, how are you going to do that? I'm like, well, I do 6-month notes. So yeah, it's that easy, right? Like if you give me $100,000 and I go fund a note with it for 6 months, and after 6 months you give me a 30-day, hey, I need my money back, I'm going to go buy this commercial property or whatever. Awesome. I just won't renew that note, or I'll sell the note, or I'll pay for it with some other cash or something. Like, it's easy when you align like that. So I think probably the other part of capital raising is making sure you're talking to people that you're aligned with.
Sure.
And because oftentimes people that we'll just say are unsophisticated investors try to launch a sophisticated fund, and accredited investors are like, they see right through it, right? I mean, but people are ignoring maybe the unsophisticated investor that meets the accreditation standards, that doesn't want to be talked to about complicated striking NAV and preferred performance fees and catch up and amortization. They just want to know, what's my pref, what's our, how long are you going to keep my money, and how do I get it back? That's it. So yeah, I think, part of my ability to raise capital is I keep it really simple. And, on that cash flow fund, if an institution wants to come in, they can. It's structured the right way. I've got a couple buddies that'll probably write $1 million checks, but I don't need them. Right? We'll fill it up with the memberships in the fund.
Yeah, there's some great insight there, and I think in the social media world that we live in a ploy for constantly having to generate new content and things like that, people tend to get well beyond the simple and into all kinds of complex things. I think you'll start to lose people. And even it's just, you got to know your audience and that kind of stuff. And I think you hit the nail on the head there. Talk to me in a little bit of detail. So it sounds you have kind of some of the more traditional debt fund, and then this other opportunity that you said was coming up where investors have the ability to invest in the actual company. So I'm curious to the difference. Why do one over the other, that kind of thing, and what the opportunity is for the investor. From a kind of difference in opportunity if they're investing in like the debt fund versus this opportunity where they can invest in the company.
So the debt fund, right, we'll start there, is a more traditional debt fund that, there's 1,000 of them out there. You're going to get a preferred return. You're going to get a split. You don't get upside. And if the loans go bad, the originator can just go form a new debt fund, right? I mean, that's just, that's kind of the way it goes.
Mm-hmm.
Now, look, that's just reality. That's why I don't really like debt funds. They are a necessary evil. And I have plenty of friends that love debt funds because they just need cash flow. They need a place to park their money for 6 to 12 months that's going to be liquid and have cash flow. With the crowdfunding, though, Peter, it is really about a dream, a vision of allowing the everyday investor to not only profit off the loans, not only have the ability to profit from the loans, but also to have involvement in the long-term success or failure of the company. I think the people attracted to real estate investing want ownership, right? They want to be involved in creating something. And just literally, I was listening to Simon Sinek's Start With Why, and if you really break it down, the 3 core pillars, the golden triangle, if you will, of why people get in this business, if you break it down, it's they want to make money. Typically, this business attracts someone that wants to flip houses to make money. And then number 2, they want passive income or cash flow. So if you think about the progression of the average person in this business, we're going to flip or wholesale till we have enough money to keep rentals, right? And then to keep in the rentals, they say is to replace their income. But then the third part of that is they want to build a long-term wealth or legacy by having assets that appreciate that they can leave to their family. So knowing that about our customer base, it's kind of like, look, you can make money with us by doing loans and doing transactions. You can make cash flow with us by buying rental properties, etc. And you can create long-term wealth by building your portfolio. And if I'm a part of all of that, why not own a piece of it and help make me successful to better yourself in something you have ownership in?
Interesting. So do you have an entity, or does the entity also acquire rentals and that kind of thing as well? Or okay, just it's just pure lending. And then what's kind of the long-term goal of the company? I mean, so is that, and how do they realize the equity growth there? I mean, is it sold? What does that look like?
All investments have risk, and with any investment, including this one, there's a risk of complete loss of capital. That said, every exit strategy is on the table as we grow the company. We may own it forever and just make cash flow and increase share value. We may try to take it public. We may merge it. We may sell it. May turn it into a REIT. I think, the beautiful thing is where we're at. If we make it a profitable company, then it can be a good company. And due to SEC regulations, I can't say a whole lot more about the desired strategy, but I'll tell you every option's on the table. And the beautiful thing is the people that invest in the company and take a partial ownership, they're in the same boat as me. And it's not, you're not stuck over on the debt fund side, and maybe one day at work, and you get your cash flow, and then I double or triple the value of the company and I pay off the debt fund and say good luck. You're in the boat with me, and you're heading towards the same direction that the board of directors and I take the call.
Yeah, I love that alignment. What's your take on the market now? You know what I mean? I think it's so many people in this space, a lot of in the podcast world and all, there's a lot of multifamily operators that spin a lot of bullshit, right? When it comes to where the market's at and, all the distress and, opportunities and all that kind of stuff. And then you see, and a lot of them shit on single family in a lot of different ways. As part of their brand and all that kind of stuff and the scaling up and all. But I've seen over the last couple of years, like you had mentioned before, there's a lot of debt funds out there. And I've seen over the last couple of years, a lot of multifamily syndicators have gotten into debt funds. Some of them obviously being pref equity deals to probably save their ass on some of the other properties they have. Others, though, being those fix and flip, those kinds of things. And I think it just goes back to showing that single family asset that they maybe dumped on, a lot of them do, in their content and all, is something that they're investing in. It's just maybe not from an operational standpoint, but they're doing it from a lending perspective because it's a strong asset class, because of all that stuff. So I'm curious to hear your thoughts on, the markets. Are there markets that you stray away from? Are you lending nationwide? All that kind of stuff. I want to hear your thoughts on the market and all, and where it's at now, where it's heading, all that kind of stuff.
Yeah, so I'm like you. I don't necessarily want to poo-poo on anyone's strategy, but there are a lot of rescue funds out there that. So look, I'll talk about me personally. My wife Jennifer and I own long-term rental properties, mainly in Texas. We own short-term rental properties in Texas. We own mid-term rental properties in Texas. We, through limited partnerships and syndications, have investment interest in multifamily in Texas. And through limited partnerships and syndications, have interest in commercial properties throughout the Midwest. We buy hard money notes. Fun fact, my wife has been originating hard money notes longer than I have. She started investing about 25 years ago, and about 2-3 years into it, she was like, those people make money. So she started loaning money out that way. So we run the gambit. We're actually buying 2 notes from Ternus today because Ternus funded the notes, and part of our business model is also to sell notes to investors that want us to service them, but they just want kind of a limited exposure and more of an ability to underwrite individual transactions. So that's my investment thesis. I'm in a little bit of everything. If you ask me what it'll look like in 5 years, I don't think we'll have any more short-term or mid-term rentals. They're just high friction investments that frankly worry my wife, and I don't like to get drawn into that at dinner. I would like to divest of my long-term rentals and probably go more commercial. I feel like commercial's a really good opportunity right now, given high interest rates and kind of what I feel will be the end of, personally believe, I should say, will be the end of more of a work from home, and at least companies going back to hybrid. And then multifamily, look, I'm getting slaughtered on most of my multifamily syndications I invested in. Any value add strategy that didn't refi before February of 2022, it's just almost every one of them on the market has now raised pref equity to dilute everyone. At this point, I'm just kind of like, man, if I get my money back, that'll be a win. Forget the return. And there's no way to get my money back, right? I mean, I can't send an email saying, hey, I'd like you to redeem me. It's a long-term play. So, I mean, that's my thoughts on the syndication market. I'll tell you, the housing market, I think it still went up almost 4% last year, the median home price. I feel like that's a misleading number. It's a misleading number because nothing in the bottom tier is selling. There's like nothing, literally 80% of the normal volume. And it's because people are getting choked out with high interest and high housing costs. So if you own a $200,000 house, and you used to be able to move up, move down, downsize, and still have a nice house. I mean, if you've got a $200,000 mortgage on a house right now, the odds are that house is worth $450.
Yeah.
But if you sold it and put 200 grand in your back pocket, you're going to have to go pay 600 grand for a comparable house, and your payment's going to be triple. So, look, I mean, I saw a graph this morning. I haven't verified it, but it came from a reliable source that I follow, that unsold new housing available on the market has now reached the highest level since 2009.
Yeah, I think I've heard that.
Yeah, pre-existing home sales were hit an all-time low last year, and are projected to be beat that all-time low this year. So I think we've got another 12 months of headwinds of just challenges from affordability, from the lagging effects of inflation. Frankly, up until 2022, they said, it takes 2 years for monetary policy to take full effect. Well, then we raised rates for 2 years straight. So I think there's still, we don't quite know how bad the economy is. I mean, this constant tariff war, I really don't care where you fall on the political spectrum. I can tell you that as we record this today, let's see, today, the S&P 500 finished up 0.5%. At one point, it was up 1.5%. At one point, it was down 0.25%. In the last month, it's down 8%. In the last 3 months, it's down 8%. So, year to date, it's down 5.5%. You got companies like Tesla, which I used to own a lot of, that year to date is down 36%. So, look, I mean, I think, the president is saying that there could be a recession. I think he's saying there could be a transition period. I'm a long-term believer in housing. I'll tell you this. I think we got a rough 2025 ahead, but 26 and 27 can be really good, which is, frankly, Trammell Crow was a big real estate guy in Texas. He said, be greedy when others are fearful and be fearful when others are greedy.
Yeah.
I think there's a lot of fear in the market, which is why I chose to build Ternus now. We will perfect our system the way we want it. And then when rates start to drop and housing starts to boom, we'll be ready to capture market share while others are probably still licking their wounds from layoffs and downsizing. And the big three lenders in the real estate investment space are down 50% year over year in volume and units. I'm up 300%, but I wasn't lending this time last year, so I'm cheating a little bit. So it's a great time to build a company, may not necessarily be a great time to operate a company built on fundamentals from 2 or 3 years ago.
Sure. Yeah. Well, you make such a good point. I mean, it's the classic. I think investors always like to see consistency and, focus and all that kind of stuff. And that's extremely important. And it's a fundamental, but at the same time, it's the, what's gotten you to where you are today and what's worked over the last couple of years isn't going to work moving forward. You always have to be reinventing yourself and just aligning with what's happening, not only today, but really, what's happening, what you think is going to happen down the road and that kind of thing. And it sounds like you've got a ton of experience over the years that you bring into to what you do now. And you got some things that are keeping you excited and passionate, which I think is such an important aspect to, just the business and it drives you to get up and do what you do every day, right?
Exactly.
Well, Tim, this has been a great conversation, and I appreciate you talking to me and sharing some info and some of the opportunities you have going on. For investors that want to learn more and get involved and get in your atmosphere, how can they get in touch with you?
Yeah, so at Tim Herriage on all the social channels. Ternus is actually Latin for threefold because we focus on those three core, golden triangle pieces. Yeah. You can go to invest.ternus.com, and that's where, depending on when you listen to this, any investment opportunities we have available will be displayed.
Sounds good. Well, Tim, thanks so much for being here.
Peter, thank you.